There's now a 63% chance that we're going to get a rate hike in June. In today's video, we're going to take a look at the SPY, the NASDAQ, the IWM, the large tech stocks, how much more room there is to go to the upside. We're going to take a look at the dollar, the bonds, and the VIX as well. All right, so without further ado, let's get started with the video. All right, first of all, real quick, we see that this is the CME watch tool for the probabilities of when the Fed is going to have a rate hike. All right, so there's a 36.9% probability of no change or a pause, and there's a 63.1% chance of a hike. A week and a half ago, this number was in the mid 70s, which means that there's now an increased likelihood that we're going to get a rate hike heading into this June meeting. The June meeting, remember when the minutes came out for the Fed minutes last week, the majority of Fed members were saying that there was going to be, they wanted a pause, which is crazy. That as soon as that article came that the majority of the Fed members wanted a pause, the likelihood of a pause drastically decreased from 75% down to 37%. So it just goes to show, don't always trust the headlines. So currently, what this implies is that if we do get another hike, it's not going to be bullish for the market. The pause that we were supposed to have would have been bullish for the market, which meant that CPI is completely gone. Inflation is being worked on properly, and inflation is not as much of an issue. But the fact that we have to make another rate hike, that is, in my opinion, the smartest route to go. We would definitely need to make sure that inflation does not continue to increase. And also, the inflation numbers that the government is basically showing is not what the inflation numbers actually are. So inflation is much higher than what they're reporting. So just keep that in mind as well. That's my opinion on that. All right, so next, clearly we see that the NASDAQ is absolutely skyrocketing, right? And the NASDAQ has been the main reason why the SPY was also showing strength. But right now, we can see that the NASDAQ opened and closed outside of the upper level of the Bollinger Band, which is showing extreme overextension to the upside. And it's very, very rare that this happens. And it's also very rare that this move to the upside maintains itself without having a pullback. So obviously on the indices of the NASDAQ QQQ, we can see that it's very overextended. But it's also important to look at the other tech stocks. But immediately for the NASDAQ right now, 347 is a major level of support for this move to continue up. Now, we could get a bounce to 347. That would be the first level of support. Below that would be 344. And if 344 can hold, then we could easily just continue. But if we get a close below 344, then in my opinion, we should retest. If we break below 344, then that gives room to 338 on the NASDAQ, in my opinion. And obviously now the NASDAQ is very, very overextended, but the main levels of support now to the downside, 347, 344, and then 338 would be the target to the downside for that. But yeah, so the NASDAQ is clearly very overextended to the upside. Now I want to take a look at the other large tech stocks that is basically moving the NASDAQ. So all of these large tech stocks are the reason why the NASDAQ is doing well. So if we see weakness in these other stocks, then that also does not bode well for the NASDAQ. All right, so let's take a look. Starting with Apple. Apple made highs here, right? But this is not the most bullish candle on Apple. This is a pretty indecisive candle heading into a level of resistance, and this is not showing clear-cut strength on Apple. All right, Nvidia, we know that did really, really well. It had another big day today, and it made another high, but this is also looking very similar to Apple. It's not, I mean, you can't really short Nvidia, but this is really, really overextended now to the upside. And Nvidia had a monster move. I'm looking at AMD. This also does not immediately look very, very strong. This looks like a setup where you should be bullish at levels of support and bearish now that this is sort of a bearish candle here as we made these highs. Amazon not looking great either. This is an indecision candle heading into a level of resistance, not looking that strong. Google, very similar, doesn't look extremely strong. We're painting red candles here at levels of resistance. Microsoft, also very similar, obviously made another high, but these big red candles across the board on all these tech stocks are not the best sign, which is my point. And we could also take a look at Tesla. Tesla actually did really well, but again, like all of these stocks, Tesla, for example, you would basically like be looking to have some sort of a put position on Tesla as well. Going long and expecting it to continue up without it falling lower first is not it would not be the best situation or the best trade in my opinion. So what we see is clear strength, right, in the trend of these tech stocks, but these are all showing big reversal or potential reversals to the downside, or at least some sort of pullback. The NASDAQ is just also very, very overextended to the upside. It's not a good time to go long, in my opinion, on the NASDAQ at this point. You would want to wait for a pullback before going long. And at these levels of support, we would need to see how things play out on everything. All right. So, there's that for the NASDAQ. Let's just quickly take a look at the IWM. There's not really much to look at. We have some earnings this week. We have Macy's earnings. We have some more IWM names that are going to have earnings this week, but nothing like too drastic. We can still see the IWM is continuing to have resistance in this range, not really doing much. 177 is resistance, continued at the 23.6% fib. And we still are above this 173.60 area. We're within this range between 173.60 and 177. The IWM is not getting that much love because most of the strength and most of the money has been going into the NASDAQ. So the IWM is not really doing much. Also, it's not helping that a lot of the banks took a huge hit. And obviously, as we continue to increase interest rates, that's also not a good sign for banks, because if we increase the rates, right, that means that there's less money that people would be making from keeping their money in banks, and that's going to cause more problems for the IWM. And this is all not even including any of the debt ceiling news. So we still have to hope that that gets solved within a week, within about a week or 10 days or so. All right. So that's that for the IWM. Now we can take a look at the SPY. All right. So the SPY, we filled the gap that we needed to fill down here at 421.22. So we gapped up, we filled the gap, and now this level of 421.22 is resistance on the SPY. Again, we gapped up. This is a red candle here at a level of resistance. This is not the time to go long, in my opinion. The NASDAQ is also showing way too much strength. There needs to be some sort of a pullback on the SPY, the NASDAQ, in my opinion. This is just not the best time to go long. Rather, if we get a gap down tomorrow and we essentially, if we start showing like overnight, if we're opening up red, then we can lean short throughout the day tomorrow. But the main levels of support, in my opinion, on the SPY are going to be this 418 level. Obviously 420, 418. The 470 to 418 range is major support on the SPY. So then below that is obviously 415. But if we break below 416.50, then we can continue falling lower. But 416 is going to be the equivalent on the SPY to 344 on the NASDAQ, in my opinion. Below 416 on the SPY, we can end up seeing 413 to 412. And like I said before, below 344 on the NASDAQ or the Qs, we can see 338. Okay, so aside from that, you know, like things are definitely continuing to show a lot of strength, but you can still see we haven't completely broken out of this range. If we're going to break out of this range, we need to get some sort of a pullback and then a continued move upwards. But the fact that the NASDAQ is the main reason why the SPY is showing this much strength, the NASDAQ is very overextended to the upside. So we need to see if the NASDAQ can maintain itself enough at support, or if the IWM can start showing a lot of strength as well and money can start flowing into the IWM names and the Dow instead of the NASDAQ, and the NASDAQ can cool off a bit. So if the NASDAQ cools off a bit and holds support and the IWM can start showing a lot of strength, then that can translate into the SPY continuing to skyrocket up as well. Because currently we can clearly see that the SPY, we can clearly see that the NASDAQ is the most relative winner, obviously. According, when you're looking at the NASDAQ compared to the SPY and the IWM, obviously the NASDAQ is the biggest winner. So now what I'm saying is the NASDAQ needs to hold support. It doesn't necessarily even need to continue skyrocketing. It just needs to hold support. And then the IWM needs to get its act together. And if that happens, then the SPY can comfortably break above 420. And then the next target would be this 427. Obviously, the mental levels of resistance to 425, but this is a very important level here at 429. So that could be the next upward target on the SPY. But regardless, if the NASDAQ starts showing a lot of weakness, then the SPY is going to fail here and fall back down. So the main thing that we have to look for is if the NASDAQ can hold support. If the NASDAQ can maintain and hold support, then that can give some sort of breathing room for the SPY and the IWM to bounce. If the NASDAQ starts to show a lot of weakness, then don't expect strength to maintain in the SPY. And if the NASDAQ is showing a lot of weakness, but the IWM is showing strength, it's not always a good sign. You don't want the IWM or the Russell 2000 to lead strength and expect that strength to comfortably translate into the SPY. So that's another thing. We just have to look for all of these different things to see how they're going to play out. And those are the levels. Clearly, the last thing we can take a look at are the VIX and the dollar. So the VIX is at support again here at 17. And we know that the VIX has an inverse relationship to the market. So if the VIX is doing well and it's strong, then that means that the market should be falling. So right now we're at a level of support on the VIX. We could get a bounce here. So let's see if that would translate into a bounce on the VIX, which should be weakness for the SPY. And then on the dollar, the dollar is still showing a lot of strength. It bounced very, very dramatically. So we know that the dollar also has an inverse relationship to the market. So if the dollar is doing well, that also means that the stock market should be falling lower. So we can clearly see that the dollar is still showing a lot of strength. We see that the VIX is at a level of support. So now we just need to see what ends up happening now in the next few days. All right. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow morning. Thank you.